Alright, so we just talked about how the VIX was acting right now. VIX kind of not a whole lot going on in the VIX, but again, we're falling less than we're rising. So this may be signs of an early pop in the VIX. We went to 21 last time we fell in the S&Ps, and if I were to show you, we popped right here. We were popping into the 23 area. This was actually interesting buying zone, by the way, but again, this trend is getting overextended. I'm positioned short right now because the VIX is so low. If you guys haven't actually been to any of the trading floors, guys should definitely check it out. You should definitely check out the trading floors. But however, all the people on the trading floors are crying, not just because of the electronic trading, but because of the low volatility in the VIX. So, for the new viewers, if you don't know how the VIX acts, there's a volatility skew. So the market falls faster than the market rises, right? So when the market falls faster, volatility goes up when markets move faster. When volatility goes down, markets go up, because markets go up slower, much slower than markets go down. So again, S&P falls like this, VIX is shooting up like this, or almost like that. And if I would illustrate on the chart, you get these moves in the VIX like vroom or vroom vroom vroom. You get these huge moves in the VIX. So you get things like that when the market goes up, and then when the market goes down, you get this slow grind, comparatively speaking to the big up moves. So right now, of course, I'm long VIX through short VXX puts. VXX is an ETF. I warn you not to get too big in this because of the downside drag, but there are some interesting positions you can take on in VXX. The premiums are decent in the puts. If you take a look, 84 cents, 83 cents. You could sell vertical 48 cents. Decent premiums. Or you could do UVXY, but that's even more toxic as an instrument. I prefer not to trade UVXY. I much prefer VXX. If I can, I trade VIX. The VIX thing is you have to buy call spreads. You cannot sell puts because puts are so cheap because of the moves. The puts are so cheap because of the moves upwards in VXX. Options are priced accordingly, and if you think you can just get free money by getting those quick VIX pops, no, because they price the options accordingly. Alright then. Otherwise, just looking at the markets, we'll move on to, after S&P and VIX, we're going to look at the Russell. I just want to mention the Russell, because the Russell leads the market. The Russell's showing some serious weakness in here. This is kind of interesting action to see the Russell. The VIX the S&Ps have been toppy, but the Russell seems some more downside bearishness. For me, if we start falling, and if it breaks through some of these major, like if it breaks through the 1,000 levels, and we can get a 52-point drop in the Russell, which is quite likely with a down move, if we were to see something like that, it would be actually really interesting. Again, the Russell, percentage-wise, it led the S&P down, but with this kind of chop, it had more chop. So if we were going to get a harder move down in the Russell, it would be extremely interesting to see. If we were to get a harder move down in the Russell, there would be more of a fall, and then you can get the S&Ps to drop. Now again, if you want to call Strategic Trading Radio, the number is 312-970-9058. Feel free to call in live, ask a question. Again, we are not receiving any callers right now, which is fine, but we are leaving phone lines open. in case anybody wants to call in. 1 caller or 3 callers is fine, but we're leaving phone lines open the whole time no matter what. So feel free to call in. I don't care if it takes weeks or months or years to get callers. I'm leaving my phone lines open because I don't have to pay anything to do it, and I can get it done easily. So feel free to call in. Please call me. I don't mind callers. I don't mind talking to adults if you adults are watching the show. Otherwise, please call in. I know one of you can. Please. Feel free. Again, 312-970-9058. Okay, we're going to go just a quick thing on the Russell. Then we're going to talk about gold for a quick second. Then we'll finish up. In the next segment, we'll go with the Euro. We'll go with the SPY and Qs. And then maybe we can go through some stocks that I'm looking at. All right. Moving on, let's check everything here. Alright, so again, you're looking at the Russell. We'll switch over to gold. Alright, so again, guys, I'm not a chartist. I'm a quantitative trader. I trade quantitatively, but I mark the charts out just to show you guys what these markets look like. Alright, so gold, we have this huge downtrend. Every bounce sold off hard. So you get this a lot, boom, and you get a boom, boom, boom. These really just go hard. Now we're getting a strong rally in here. Strong rally. So I'm a seller of this rally. You know, if I were to show you, I don't know if I can get the, I can't get you some studies because it's a paper platform. But, however, one of my trading models that I do use to figure out some of the trades I do, I have developed a technical-based trading model, and I'm going to tell you it's reading because it goes with, here we go. Alright, so right now what it's telling me is gold is coming very close to a strong short. It was a strong short at the 1343 level, which is right here. It was also a strong short right going up into here also, and coming into here. It was a strong buy only at this level, but again, the system will not buy into, it sells into downtrends and buys in uptrends, and that's what it does. So again, I can't show you the exact study and how it looks like here, but again, just to show you how the model worked out. It's kind of an interesting thing I've been working on. I've been working on a few models lately, and I just want to show you that going up, if we go up into this area again, which is, I'll mark it out for you. If we can go up into this zone, if we can go up there, it would be a very, very interesting short. And let me just remove, yes. Alright guys, we're going to go on a quick break. I hope you enjoyed this segment. We'll be back in 2 minutes. Strategic Trading Radio Live. I am your host, Alex Weisenbach, and I'm a 12-year-old stock and options trader. I've been trading for 3 years now with a quantitative trading approach. Mostly stocks, mostly options, but I do a lot of ETF pairs trading like that. If you want to call into the show live, the number is 312-970-9058. Somebody please call in. Don't leave me hanging. I don't care if it takes weeks, months, or years for somebody to call in. I'm letting somebody call into the show. Alright then. So since phone lines are open and all the contact information is made clear, I'm going to go ahead and we're going to take a look. We're going to take a look at the markets. Alright, so we're still looking back at gold, but we're going to do a quick switch over to the euro. Okay, the euro, as in the euro countries, euro has been in a tight range and we're starting to fall off a bit. So, it seems, okay, the chart didn't update, but we're starting to fall off a little bit in the euro. And hopefully we can get some bearish trades in. So, if I were to trade this, I'm going to show you first of all, I'm going to go down a pair chart. I'm going to go load study, my studies, pair chart, load style. Alright, so there's no pair right now. So I'm going to take a look at a pair that we could do. We could do euro minus yen. Let's see how that works. Oh, pretty good correlation. So what I'm going to do is I'm going to sell euro, buy yen. I'm just going to show you where yen is trading at. Just a second. It seems to be taking just a bit for the charts to upload. Just a bit. Alright, 1 second, please. There we go. It's taking just a bit for the charts to load up, which is fine. There we go. There we go. All seems good now. Otherwise, you're looking at yen kind of cheap compared to its range, and euro much more expensive to its range. Let me get the euro right back here. The euro, of course, much more expensive. So what we'll do is we'll sell the euro minus yen pair. You're supposed to adjust it to notional values to make it all proper. You're supposed to adjust to notional values to make everything all proper and perfect. But again, however, it's kind of an interesting trade. If you can't do futures, what you do is you do FXE minus FXY. The pair, it moves around quite a bit here. For the last while, though, it's been kind of tough, but you can get some decent moves in here. It's had a 30-point move. It's had a $6 range, but you're probably going to have to take a little more risk in it if you can't trade the futures. Otherwise, it doesn't make a whole lot of sense yet. So that was a trade I'm considering, but I may just put in some bearish. I may end up just putting in bearish positions in the euro through FXE through the options, which is fine also. And anyway, we'll move back here. Alright, so if I can do something with the options, that would be awesome. Just a second, we're having a quick technical difficulty. Let me move and let me just do a quick check here. Just a second. Welcome back to Strategic Trading Radio Live. We had do a quick stop, unfortunately, because we're having some technical difficulties. Phone lines are still open, by the way. It was something we had with our phones. Okay, we'll go do a quick thing back on the markets, and we're going to look at a pair I actually put in today as kind of a defensive play against my overall portfolio, but also partly because of my model, which I can't discuss in big detail right now, but it was something I was working on earlier. So let's just go back. Alright, so you can see SPY minus QQQ. I bought it because my model said a buy. I'm not really going to go into all the specifics of my model, but it's also a defensive play right now against my short portfolio. And again, if you want to call into the show, the number is 312-970-9058. Call this number, please. I'm going to keep this on for weeks and months and years until somebody calls in. Alright, going back here. So it's kind of just a defensive play against my portfolio. It kind of hedges some of the directional risk, is also allowing me to be directional with some of the stocks. The correlations between the SPY and Qs are great because, again, they're just both indexes. They're both indexes, the S&P 500 and the Qs. If you want to do this, I'm pretty sure, I'm not sure about all the notional values on the futures, but on the futures, I think you can do this 1-to-1, and you have to do NQ minus ES. And on the futures here, I think you can do this 1-to-1, and the same pair is a little different on the futures, but the model likes long S&Ps, short Qs through the ETFs, not the futures. Just FYI, there's also another reason I'm not doing the futures, because what the model says. For me, though, the model would be shorting this pair all the way because of the S&P and the Qs. Qs went up more, but I wouldn't even bother trading that. I would just do Qs, S&Ps, and then the model, of course, would be looking for longs, and it just seems to be taking a second for the charts to load again. There we go. So the model would be buying these dips right in here, just for you guys to know. Otherwise, that seems decent going through those pairs. Otherwise, the major markets right now are just kind of tough. I'm doing a few pairs trades just to hedge out some of the risk. The pairs trades have been interesting. The other day we talked about an interesting trade where we'd sell gold times 10 and then sell gold and then buy 100 silver. SLV times 100. We would sold 10 of gold and I bought 10 of silver. I sold the gold, bought the silver. The pair did really well. So I went short that pair, and it was down 63 points today. Or if I were to show you proper way, it would be SLV times 100 minus GLD times 10. And then, of course, we got a big pop in it today, about 8.95%. It was a good, interesting trade to do. It was something nice. If I want to show you guys, if you want to do a pair, I'll show you how to do it. This is not the best pair to do. We'll go to SPY minus QQQQQ. Alright, so if you want to see how to do the pair, what you do is you buy. It sets you up with a blast all order 1-to-1, and it's taking a minute for everything to load again. Sorry about that. It sets you up with a blast all order 1-to-1. You just click confirm and send, and then you can change it to 10 contracts. You can change this to 10 or 15 or 1 to 1.5. You can change it however you like. Confirm and send, it'll send the order. So we're under hedged in this position, which is fine. And we'll go ahead and send the order. You can do some adjustments, shift click, whatever you want, and you can do it that way. Otherwise, that's just a basic rerun of how to do it. Alright then, we're going to take a quick break. In the next segment, I'll go through some individual stocks I'm looking at right now. It's Potash, Groupon, Hewlett Packard, WLT, and FXE, which I am probably thinking a bearish put spread, but I'm not sure yet. We'll take a look at the implied volatility together. We'll take a look at the implied volatility in FXE together. If you want to call into the show, call this number, 312-970-9058. I will answer your questions live on the show. Alright, we're going to go on a quick break. Hope you enjoy the segment. Welcome back to Strategic Trading Radio Live. I'm your host, Alex Weisenbach, and I'm a 12-year-old quantitative trader. I trade quantitatively, and all my trades are quantitative in nature. Alright, so this is the segment we're going to look at some individual stocks right now for you. I have Potash, Groupon, Hewlett Packard, WLT, probably an Iron Condor, and an FXE bearish position. If you want to call into the show live, the number is 312-970-9058. Feel free to call into the show and ask a question. Phone lines are open. Again, if you try calling this number after hours, it will not be open because it is just Strategic Trading Radio's number, and phone lines are not open. If you have any technical difficulties, questions, comments, or concerns, please email strategictradingradio@gmail.com or send me an email personally, alex.optionstrading@gmail.com. That is my public email address. Alright, moving on to the markets. First stock we're going to look at is FXE. FXE is the Euro Trust. It's just the actual Euro currency. If you want to check out a chart, I showed you already in the other chair. Let me just switch this over to default. Just one second. Let me adjust this. Here we go. Okay, there we go. Alright, so let's look for some trades. So, I'm bearish, right? $131 stock. Okay. Fine. I want to do some sort of trade in here. I'm not sure what, though. Maybe I could short a call spread, but take a look at where the options are. No implied volatility in the stock. 7.5% implied volatility. The IV range is 14%, much lower than the historical volatility, so we can't sell call spreads. But what I was thinking is doing a undeep and wide, buy deep and wide, 1 month, 2 strike wide. Oh shoot, sorry about this, guys. 1 month, 2 strike wide, vertical spread, 102 debit, 51% chance of making money because again it's a debit spread, low probability of success, and you can adjust this as you wish. You can make a max profit around $98 for a max loss of 102 with a probability of success wrapped around 51% approximately. You still make money if the stock ends up below 131.98 by the end of expiration, which is kind of where you want it. And hopefully you can get something out of that right there. And then we'll make a quick adjustment. So the only thing you can do in this stock, unfortunately, is all you can do is a bearish put spread. The thing is, implied volatility in so many stocks is so low, it's insane. You can't get any implied volatility in this market right now, and it's really tough for lots of traders. It's very tough. A lot of the stuff you have to do are debit spreads because the implied volatility is so low. There's not a whole lot of stuff you can do otherwise, and then there's just little to do. So we're doing our best. Again, if you want to call into the show, the number is 312-970-9058. If you want to call into the show live, that would be great. We would love callers. We've never had one yet, but hopefully we can get somebody on. It would be great. And then I guess we'll just move on to the next stock. We'll take a look here. Alright, so the next stock we're going to look at is going to be Potash, and I'll show you why I like this. Let me just switch over here. Potash, by the way, guys, was up 3.47% today. This chart, big gap down on earnings. Okay, great. The reason for this is corn. Corn is dying. Corn grinds lower. The chart's taking a second to load on your end, but it will be there in just 1 second. There we go. This thing is, corn has been grinding lower all year long. Grinding lower, grinding lower, grinding lower, and grinding lower. That's all it's done so far. But I will show you, if we were to go out, 2 years, look how fast corn pops. So implied volatility in corn actually rises. Implied volatility in corn and commodity products actually rises when the markets go up because commodities go up really, really, really fast. But they grind lower. So when they're really cheap, when commodities are really cheap, comparatively speaking, or low, as others would say it, as commodities are low, implied volatility of them is really low also. So if we can get corn, you see 8 percentile implied volatility. So corn, comparatively speaking to its previous implied volatility is really cheap, making corn cheap, comparatively speaking to implied volatility. Making potash low, because it's a corn stock here. And they should, because they're a stock, have high implied volatility because they just got out of earnings. So what you can do is you can sell wide put spreads, or you can do iron condors. Personally, I did a put spread, but I'll show you both trades. For a bullish or neutral trade, you can collect 64 cents in credit, $136 max loss, with a high probability of success. It also makes sense to buy a covered stock spread, buying 100 shares of the stock and then selling a call against it. You reduce your cost basis. You can reduce your cost basis over $1.60, which is nice. High probability of success. Now again, don't quote me on these numbers because of the bid ask in the after hours trading. So just to show you that. But again, potash, a really interesting trade to look at. There's lots of stuff going on. And next stock, though, is Groupon. And we may just go back, if there's more time, we'll go back through a few stocks. This is some interesting action. Groupon, way up, way down, way up after earnings. This, to me, I don't know about you, but this action up here, and it's taking a minute for the chart to load. I don't know why. This action up here, I think is really bearish action. I don't know why, just think it is. And then again, you might guys, well, you're a quant trader, right? Well, alright, so when I trade for major markets and ETFs, I use a quantitative model that I've developed to trade and deal with the directional biases. With individual stocks or the options I trade, it's all based off these probability numbers because I prefer to trade with a quantitative approach. I could care less what the directional bias is in here as long as it fits with implied volatility and everything's alright. Implied volatility is in the 4th percentile. So all you can do is buy a put debit spread. From my perspective, that's it. That's all I can do. 51-cent debit, I can make $49, 51% probability of success, just a quick cheap shot. That's all you can do in a stock like Groupon right now. That's really it. Implied volatilities in these stocks are so low that you can't really do much right now. It really stinks, but again, you really can't do much in these stocks. And again, it's getting harder and harder and harder to do it, but it's just getting tough right now. Okay, here. Okay, I just want to try this out, guys. The screen looks way too small, but I just wanted to see how that would work out. You definitely can't see it, but I just am showing on this side. You can't see the puts, but just look at this. The charts seem delayed. Just take a look at this. Wow. That is low. That is low. 4th percentile. Implied volatility is at 57%. It was 200%, 150% not long ago. If we were to look at a chart of implied volatility, I'll bring it up for you guys. Sec here, we'll bring up implied volatility. Volatility implied, and then I will set you guys up just a sec, having technical issues here. Alright, here we go. Implied volatility, apply. Alright, so look at this. Implied volatility 150%. Just at the beginning of the year, 150% implied volatility. Right over here. These are big moves, guys. Implied volatility, these are big moves, and the thing is, the overall market's implied volatility is so low with the VIX trading at 12. With the VIX at 12, it really is quite tough. It really is quite tough. Now let me move my head. Let me move my big head. It's tough. VIX is at 12.81. It's tough for these. I'm just letting you guys know because I don't want you guys to think, oh, I'm alone, I'm a terrible trader. No. These are terrible trading environments right now. To have VIX so low for such a long time and the market just grinding higher and higher and higher. It's not the best trading environment. So don't think you're a bad trader. Really don't. It's just your trading environment. Now, if anybody wants to call into the show, the number is Strategic Trading Radio. 312-970-9058. If you want to call in live, that is the number for the show. Check it out. Some decently interesting stuff. Alright, so moving on. I think we're going to take a look at Hewlett-Packard. Hewlett-Packard is actually an interesting stock because of the high implied volatility in it. The high implied volatility in Hewlett-Packard. So let's just go and change to HPQ. Okay, I'm just going to tell you the stock is high. 26.74. Stock is high. No reason. I'm just letting you know the stock is high. We're not even going to look at the chart because there's no point. The only point here is that implied volatility is in the 97th percentile. The 97th percentile. So let's see what we can do in here. We can definitely sell a call spread. Implied volatility is high enough. and it's just taking for a minute. There we go. You can sell call spread, vertical, sell vertical, within the strikes a little bit. Oh, 76-cent credit. A probability of success around 62%. Max profit $76. You reduce your cost basis to $27.76, almost $1.02. So if the stock goes up $1.02 by expiration, you'll still be making money. Decent probability of success. I like the trade. Or what you could do, if you want volatility to contract, you could do a bullish butterfly. If you were to think that volatility was just going to contract, you do a bullish butterfly, you buy the butterfly. And then what we can do is the 27.28, so we can make it the 26.30, 38-cent debit. Decent trade. I'll show you in the Analyze tab for if you don't know what this looks like, because it looks a little different. I within the strikes to keep a decent range, but we want the stock either between 26.40 and 29.63 by expiration, and hopefully we can get to hit 20.28 and we'll get our max profit. It's just a $38 max loss. You can get some decent return on capitals. I'm even happy with a $30 thing where we're right here, but the thing is you have to wait to expiration. You have to wait. You can't roll these trades because you'll never make money in them unless you wait to expiration, because what the butterflies do is the butterfly opens up after expiration. Before expiration, if you can see here, this is what it looks like, this white. You can't make any money before expiration. But at expiration or near expiration, if you close between this range, you are looking for some interesting profits there. Alright, last stock, WLT. WLT is Walter Energy. Okay, I'll tell you. Implied volatility, you may not be able to see it, but it's in the 100th percentile. And the thing is, the stock has gone up a lot. The stock has just popped real fast. So there's some interesting things you can do. It's just an energy company. And I'm a quantitative trader. I don't even really know what these stocks are. I trade quantitatively. I trade based off probabilities. I trade based off math. I trade based off models that I've built or made or created or whatever. And I don't necessarily even believe that the models are some great predictor of direction. They're at 50-50, but they allow me to incorporate the directional trading and get the risk to reward I would like to make. So going back in the WLT, with the implied volatility, what you can do is you could easily sell a put spread for some interesting areas. You could sell put spread or an iron condor. So I'm going to do this all as one trade in the Analyze tab, and what I'm going to do is I'm hitting Control and I'm hitting on the bid and ask with my mouse. And it sets up as an iron condor by itself. So what I'll do is I'll sell. I don't want it skewed anyway. So what I think I will do is I will sell the vertical. Maybe I could skew it to the upside. I'll skew it to the upside, why not? Sell 58, alright. And then, shoot. Alright. And then I'm selling the 15-16 call spread and buy. Alright, so it should look like selling. Here we go. So your max profit is 106. Your something's wrong with what I did. Okay, so let's see this again. So I'm selling. It's always tough to set up the iron condors here. So selling 9, or I'm selling 11s. I'm buying 9s. Buy. And then I'm selling 15s. I'm selling 15s. And then I'm buying 16s on the put side. And then it should look sort of like this, except we're selling one more call. We're supposed to be buying the 16s. Define your risk on both sides, max loss. So a low probability of success is the issue with this. So what you can do is you can go out and within your strikes. But here's what worries me about this trade. That you can within your strikes, but you have to deal with these half strikes in the middle. So what else you could do if you want to go non-directional in this stock? You could just sell put spread. Not that wouldn't be non-directional, but the only thing I could think of here is selling a put spread. Otherwise, the iron condor is tough to do. I really want to do it, and guys, I just take the stocks. What I do is I take the stocks and I work through the trade ideas with you. So you guys kind of get my ideas. So I work through the trade ideas live on the show to see how everything looks. Otherwise, sometimes I look at stocks and there's just no trade to do. So, I hope you enjoyed this broadcast. Thank you for listening. My name is Alex. I'm a 12-year-old trader. Nobody called into the show today, but that's fine. But if the phone lines will still be open for another few minutes if you want to call them not live on the show. If you have any questions, comments, or issues, send an email to strategictradingradio@gmail.com. Or personally send an email to my public email address at alex.optionstrading@gmail.com. Thank you for listening. I hope you enjoyed this broadcast.